In this class, we'll deal with commercial papers. CPs are short-term promissory notes. As you know, promissory notes are issued or drawn by the debtors, while bills of exchange they're usually drawn by the creditors. So in promissory notes, the debtors promise that they'll repay the amount. So CPs are such short-term promissory notes issued by reputed companies with good credit standing and having sufficient tangible assets. CPs are unsecured and are negotiable by endorsement and delivery. They are unsecured, but the credit rating of these reputed these companies which issue CPs are verified. You will look whether they have sufficient tangible assets. So companies with good credit standing, that is reputed companies, will be only given or are only allowed to issue CPs. CPs are normally issued by banks, public utilities, insurance, and NBFCs, non-banking financial institutions. CPs in India were launched by the RBI's notification in Jan 1990. And it was launched with a view to enable highly reputed companies to diversify their sources of short-term borrowings and to provide a platform for the investors to deploy their surplus funds, deploy their additional funds. The issuing company is required to meet the stamp duty, credit rating agency fees, standby facility charges, etc. And the maturity period of CPs was 15 days initially, but now it has been reduced to 7 days and a maximum of 1 year. And CPs are mainly issued to finance the working capital requirements of corporate enterprises, and they're rarely used to finance the permanent working capital requirements of fixed capital. Fixed capital like land and building, plant and machinery, furniture and fixtures, all those are fixed capital. And permanent working capital, which is used for a longer period. Here we use seasonal working capitals. To avail funds for seasonal working capitals, we issue or companies issue commercial papers. Since these CPs are issued by highly reputed companies, these instruments are considered to be highly secured and very safe. CPs are usually issued at a discount and redeemed at the face value. Any person, bank, company, or other registered incorporated bodies can invest their surplus funds in the commercial papers. And which are the parties who can actually issue these commercial papers? It could be highly rated corporate borrowers, both public or private sector companies. It could be primary dealers or satellite dealers, all India financial institutions. All these entities are allowed to raise funds with the help of CPs, but they have to fulfill some conditions, some criteria. There are 3 conditions to be fulfilled. The first is tangible net worth. Net worth is the excess of your assets over liabilities. So the tangible net worth as per the latest audited balance sheet is not less than rupees 4 crore. So there should be a minimum of 4 crore as your tangible net worth. Second, has been sanctioned working capital limit by banks or FIs. So the limit of amount will be sanctioned by banks or FIs, and that amount will be only given to you or given to such people who issue commercial papers. And the borrower account of the company is classified as standard asset by the financing bank or institution. That is, a borrower is considered or a loan is considered. A borrower acquires loan. So a loan is considered as a standard asset. Loans are assets for the companies, right? So, and deposits are liabilities because they have to be paid back, deposits. All right. So loans are assets for a company and it is called as a standard asset, It is a standard asset only if it has if the principal and interest amount are duly paid by the borrower. So only against such accounts CPs will be issued. And CPs are usually issued in the form of promissory notes, and earlier it was issued both in physical form and dematerialized form, that is in electronic forms. But now new issues are only issued in the form of dematerialized form. And the maturity period of CPs, as we saw, is minimum of 7 days. Earlier it was 15 days, but now it is reduced to 7 days and a maximum of 12 months. The minimum size of the CP is rupees 5 lakh, and it can be also issued in the denominations of rupees 5 lakh or multiples thereof. But an individual issue is of 1 lakh, so at least a lot of 5, that means at least minimum is rupees 5 lakh, though a single issue is of 1 lakh. But an investor, when he has to invest, he should invest at least rupees 5 lakh. We have been using this term primary dealers several times. Just for your information, who are primary dealers? Primary dealers are actually banks and financial institutions. Primary dealers are registered entities with the RBI who have the license to purchase and sell government securities. So they buy government securities directly from the RBI. And this was introduced in the year 1995, and PDs were used to promote transactions in the government's security market. All right. And some of the institutions which are engaged in or who are called as primary dealers are ICICI Securities Primary Dealership Limited, Morgan Stanley India Primary Dealer Private Limited. So these are some financial institutions, and there are banks like Bank of Baroda, Canara Bank, Union Bank of India. These are some of the nationalized bank who are primary dealers, and primary dealers were introduced basically to promote transactions in the government security market. All right, because government is one of the largest borrower and who issues treasury bills and such securities. So primary dealers are enrolled to promote and create a market for government securities. And there are satellite dealers who assist primary dealers in this function, and even they are also people who are eligible to issue CPs. So primary dealers and satellite dealers can issue CPs. Two types of commercial papers. The first is direct papers, which are issued directly by the company to the investors without any intermediary. And companies is issuing direct papers, they announce the rates of commercial papers with different maturities from which the investors can choose the one according to their requirement. The second one is dealer papers, where there is an intermediary, that is a dealer or a merchant banker, who will act on behalf of the client and issues the commercial papers. So here the dealer arranges a private placement of the paper, and in addition, just like a merchant banker would provide advisory services related to timing of the issue, the discount rate, the maturity period, etc. So these are the two main types of commercial papers. Then new forms of commercial papers. The first one is master note, issued by finance companies to bank trust departments, that is bank departments which administer and manage trusts. So these are bank trust departments and other permanent money market investors. So here it is actually the investing firm who would make an agreement and specify or notify the issuing company that they'll specify the amount that they are willing to purchase on a particular day, all right, provide to the finance company which is planning to issue the CP. And then, if the issuing company is okay with it, it would issue a paper at that agreed amount. That is the amount it decided by the investing company. The second is medium term notes. Medium term notes have a maturity period of 9 to 10 months, and these are again unsecured obligations. Investment grade corporations generally issue these notes at a particular rate of interest. These investment grade corporations are those companies which issue these unsecured loans. So they need credibility, right? So there is a particular category of grade given by the credit rating agencies to these companies, and that is why they are called as investment grade companies or corporations. And the third one is asset backed commercial paper. Now, the interest rate on these papers are comparatively lower, and it is a combination of loans and credit receivables. Here there is an entity called special purpose entity created for this purpose, and the issuing company would actually remove the loans and receivables, that is the amount it has to receive. Loans are also amounts which the company has to receive. So such loans and receivables are removed from its balance sheet and placed in the SPE, which is an entity created for this specific purpose. And once the issuing customer gets back all these loans, loan amount, and receivables, it would pay off the SPE. So this is how it functions. So thus we can say that commercial papers are safe, just like the treasury bills. These are safest means of investment, and companies can fulfill seasonal and internal needs with the help of CPs, because these are for short terms and therefore it is highly liquid also. These are negotiable and therefore highly liquid, and these are for short term also, which contributes to liquidity. And it involves less documentation, which makes it simple to operate.